Hello, everybody. Hope we're well. Hope we're having a good day so far. Done all right today. Down about 100 pips. Not bad for a Monday, considering there was low levels of volatility in the market. So hopefully we'll continue that throughout the course of the week and have a really strong week. So I did decide to be in and out of some trades today, just on the back of it being a quiet day. So I just decided to take some pips and get out of some positions and kind of reevaluate once we start getting some more liquidity in the market this week. So we'll see how they go. Right, so just to get started, which we will. Just obviously to talk about the news the rest of the week. Obviously, I did put a message in explaining quite a bit of it yesterday, just what we're going to be expecting throughout the course of this week. And one moment, sorry. Make sure this screen's on. Yeah. As you can see, today we didn't really have much news apart from the euro inflation. So I did close my euro yen long trade for about 35 pips. Just on the back of some bad news coming out. I was just waiting to see how it reacted before I kind of evaluated it and decided to get out because euro yen did start to sell off slightly, just a couple of hours after the news, and not bad exit because it has dropped a bit since then, but I am potentially looking at getting back in it. It does look like it's forming a bit of a bull flag. And it's retesting the previous resistance. So, moving back over to the news, just what we were expecting overnight is Aussie policy meeting minutes. So they have done rate cuts over the last few months, and we have started to see the Aussie economy slightly improve since then rate cuts were done. So we're expecting a bit of positivity from the Reserve Bank of Australia, sorry. And that'll probably come out in a minute. So I actually am into Aussie positions. So I'm going to go through the current Aussie positions as to why we took them as well. But yeah, I probably am going to hold both of them throughout the news. So tomorrow is pretty quiet as well. Not really much happening. CAD manufacturing sales, they're expecting a minus 1.8% fall. And as you can see, it's quite sporadic in terms of it going up, down, etc. And it is quite unreliable over a period of time. So there's no sort of consistency with this data. So yeah, not really much I can say if it's going to come out or above. Then obviously we go into Wednesday. We have CAD CPI. That's really the main bit of the news coming out on Wednesday. And they are expecting a 0.1% increase on the back of last month's minus figure. And as you can see, it's been quite steady over the last few months in terms of inflation has been increasing. So it has been decent. This is only monthly figures, but we do tend to get a bit of new moves off of it. So watch this space. We could be setting like a little order before the news because it does tend to make a good move once the news is released. Then obviously Wednesday we've got the FOMC minutes. So just reading some information from the other day, they are expecting another rate cut in September, and this is probably going to come to light in the minutes, whether they're going to rate cut, even though they did say they're going to wait for the data. It is expected with everyone in the world kind of cutting rates at the moment, such as the Aussie dollar, New Zealand dollar. The ECB are talking about cutting rates further and going into negative rates. The only ones really not talking about cutting rates are obviously the pound, but they may do in the event of a no-deal Brexit, and obviously the Canadian dollar. They're not talking about rate cuts at all, as they've increased their rates over the last couple of years quite steadily. So watch this space on that one. Um, with a rate cut kind of really priced in and expected, the data still remaining strong. You could see a bit of a bullish dollar on the back of it, but obviously we'll wait and see. I am currently in a US Swiss trade, but this is a couple of days away, so we could well be out of it by the time this comes around. Then going on to Thursday, we have the services and manufacturing throughout Europe, Germany as well, and obviously the rest of the Euro data. So as we can see, this does move the DAX quite a bit because a lot of the manufacturing businesses do form part of the DAX 30, which is obviously the German stock market. And as you can see over the last few months, well, last 1, 2, 3, 4, 5, 6, 7 months, should we say, it's been going into contraction. And we can see obviously last month it had its lowest reading, and they're expecting the same again this month. Again, this forms a big part of the German economy. But this is why we've kind of seen the German economy slip into a contraction. So last week, if we look back at the GDP figures, Germany come out on Wednesday, I believe it was. So here, we can see that we had a contracting GDP data come out of Germany. This is largely down to the slowdown within the manufacturing industry. Because as you know, you've got a lot of cars are manufactured in Germany and sold in Germany. And if that's starting to fall back, the manufacturing industry, it's going to have quite a big impact on the economy. And it could have a bit of a long-lasting impact on the economy. So if Germany do report, again, a quarterly drop in GDP next quarter, then you will see Germany officially in recession. But like I said, exactly the same as the UK. UK obviously reported a contraction in their GDP last quarter as well. So I'm not really expecting any upturn in this, but this is really going to set the tone over the next course, probably over the next quarter's GDP. If this keeps falling and keeps slipping down, then you're likely to see Germany fall into a recession. And you can see basically a knock-on effect across Europe. So you can see Europe slowly slipping down. And even France, they're going below 50 now. So it does mean that the industry is contracting. They're expecting a reading of below 50, although we've had a few months above it. They are expecting to go back below it. So we could see a bit of a sell-off within the euro come Thursday morning if they do all start to report contraction, especially if the services industry starts following it downwards. It has held at the moment, but let's watch this space and see the data and wait for it to come out. It is over the course, quite a bit of data over the course of 45 minutes. So going down further, we have, well, first of all, we'll talk about this. New Zealand retail sales are expected only a 0.1% increase. It has been slowly increasing, steadily increasing over a good period of time. We haven't actually we had a minus figure within the last few years. So it'll be quite a bit of a shock if it does come in, but it could be just a blip of a quarter. Normally, with what's happened with New Zealand lately, if we go back, when was the last time it recorded a minus? Back in 2012. So it has been steadily increasing over a period of time. So just as we know, the New Zealand central bank have cut rates twice within the last couple of months. And normally when central banks do cut rates, there is more household spending because theoretically they've got more money because there's cheaper lending. They're more inclined to lend money. And if they're lending money, they're obviously spending it within the economy. So I'd be very surprised if it did come in as a minus, considering we haven't had a minus in 7 years on it. And then finally on Friday, just to wrap it up, we have got core retail sales from CAD. And again, they're expecting a downturn on last month's downturn in the economy. But this is quite sporadic. But it did have a big jump within these 3 months, and then we saw a bit of a minus last month. So they're expecting again another pullback. So there is obviously federal chair power talking, but I'll talk about this as to what he is talking at. So it's something called Jackson Hole. Has anyone heard of Jackson Hole before? If not, just put no, just so I know you have or haven't. So you can go to Forex Factory and just have a look, but basically this is an economic policy meeting. And this is held between all central bankers. You get central bankers from all over the world, obviously all the ones that we trade, the major currencies. You get finance ministers from the major countries, and you also get leading academics and economists there. We basically talk about the world economy and how it's going and any hiccups, etc. So as you all know, in the past, well, as you know, over the last sort of few months, especially 6, 7 months, or a year, should we say, there's been a trade war between US and China. And that's probably starting to cause the slowdown within the world economy. Because in the world economy, this is why central banks have been cutting interest rates. So, especially the Aussie and New Zealand, they're very export reliant. Their exports have slowed down, mainly on the back of China probably buying less from them as well, because the Chinese economy has been slowing down. And just due to that happening, they've cut interest rates. And again, the Euro is looking at cutting interest rates, the US are cutting interest rates. So, the reason why these are all cutting interest rates is to stimulate growth. And you only need to stimulate growth when growth has taken a downturn. So they're really going to home in and talk about the slowdown in the world economy. They're going to highlight the trade war as being the main sort of reasoning as to why that's been happening. So it could really be a case of it being sort of risk on session. So meaning you're likely to see safe havens increase should these talk quite negatively about the shape of the world economy as a whole. And that's where Federal Chair Powell's given a speech. Normally you do get about 3 or 4 central bank chairmen giving speeches. So I'm quite surprised there's only one there at the moment. And it is a 3-day event that goes into the weekend. So you do normally get surprises come out of it. So 3 years ago, Janet Yellen, who was the federal chair, she's not a man, she's a woman, who was the federal chair, did come out and turn around and say, look, the US are going to start increasing rates again. You saw the US fly on the back of it. Then you saw, a year before that, you saw the Governor Kuroda, who's the Japanese central bank, he come out and said that they're going to keep on doing their massive bond buying campaign. So you saw the Japanese yen weaken on the back of it. And then 2 years ago, you saw Mario Draghi come out and say that, 2 years ago or last year? Might have been last year. They're going to come out and stop buying bonds and reduce their QE program. So the euro flew on it. So you do normally get a big announcement of at least one central bank throughout it, but you normally get more than one speech. So I'm quite surprised there's only one in there. But you probably will have more talking about economic policy. So it can get quite volatile because you do get news reports come out throughout the day because there's no actual press allowed into the meetings. But you do get people who attend the meetings come out and regularly talk to press about it. So you can get, obviously, the message will get out on Twitter and you'll see things fly, basically. So yeah, you could get moves off the back of whatever comes out of these. So it can get quite volatile. I don't know why the first day it says medium, second day high, and then third day medium again. Don't know if they've got something special planned for the second day, but they are actually all normally red. So just be careful. This is happening in the US, so it won't normally have to start until the US session. The New York session kicks in the afternoon here in the UK. But it's unlikely I'll be holding anything over the weekend, just in case anything does pop up with it. And then also one final thing, we've got obviously Boris Johnson, Emmanuel Macron, who's the president of France, and Angela Merkel, who is obviously the German Chancellor. These are the two main figureheads of the EU. And basically Boris Johnson has got their meetings to try and convince them to open up the withdrawal agreement. Obviously, should they agree to open up the withdrawal agreement and make changes, then you could obviously see the pound start to fly. If they hold their stance, then you could potentially see the pound melt a little bit. So Boris Johnson has had a call with the Irish PM for over an hour today, and Boris Johnson did stress the need to keep free trade in Ireland between obviously Northern Ireland and the Republic of Ireland. But the Prime Minister of Ireland, Leo Varadkar, did kind of keep a strong sort of stance in regards to, look, we're not opening the withdrawal agreement. So he was trying to get into the Irish PM, because if he can start making the Irish PM think about changes, then obviously he can voice his concerns to the EU, and then the EU might listen, might not listen. There obviously was something that came out a couple of weeks ago from a meeting from Michel Barnier, which was secretly recorded on someone's mobile phone, and Michel Barnier was pretty much saying that, right, we're keeping the Irish backstop in as a sort of bargaining chip. So as a sort of way of holding the UK ransom. And look, there are ways that they can get around it, but if they're willing to budge on it, it's another story. So the EU do normally leave it till quite late. So with Parliament not wanting a no-deal Brexit, the EU have got basically an ace up their sleeve because they know Parliament are on their side. Because a lot of Parliament don't actually want to leave the EU, which obviously that would help the European Union. But obviously Boris Johnson said, do or die, we're going to leave regardless. So really and truly, Boris Johnson's got a big battle in his hands. They do end up, say, bringing down the government and bringing in a temporary PM while the general elections go on, which is likely to be Jeremy Corbyn. Again, you can see Labour's stance has changed to Remain. So potentially you could see the pound rally again on the back of it, because there would be a likelihood that it will be a much softer Brexit if there is a Brexit at all. So look, we're over 3 years in to it since the vote, and we still don't know what's going on. We actually still don't have a clue what is going to go on with Brexit. So we've just got to basically sit tight and watch this space. And all we can do is wait to see what happens with it, what comes out of the meetings this week. So there's no point guessing it. If I was to guess it, I'd probably say Emmanuel Macron and Merkel aren't going to budge. So yeah, watch this space on that one. So just moving over to the charts, starting off with what we call the dollar index. So the dollar is looking rather strong. So just going back, we can obviously see, looking at the shape of it, a higher high made, higher low made, and we could well be on to making another higher high. So we do have this point of resistance that has actually quite strong in the past. And it looks like tonight that we might actually close above it. So we've got to see how the daily candle closes. If it does close above it, then we are likely to push back up and go to higher levels, as we can see, and make that new higher high. So obviously it's not just going to fly up there. We'll see what happens on the meeting minutes on Wednesday, but over the course of the next couple of days, we are expected to probably retest these highs again. So we are in US Swiss long, we're on pound USD long, but obviously pound USD is more taken on the back of there potentially being some pound strength. So if this does close above this resistance level, then we are likely to see it. We could see a little retest of it tomorrow, and then it continue to move upwards. So back up to at least the 99 level, or just before the 99 level. And if it carries on going beyond, then we're looking at 99.50. So gold has fallen today, which obviously has helped the dollar strengthen. And we'll go and look at the gold charts in a moment. So as you can see here, from the move up, come back down, hit the 78.6 fib. This was a bit of a false candle because it happened within the last hour, so I'm not sure. It did happen on TradingView, it's not happened on my other charts, but we are back to rejecting strongly around the 70% fib. So I do expect us to retest these highs if we do close above this resistance here. So I hope we all have the same on there. So moving over to gold. So I've got a bit of an interesting one for gold, which we shall see. So gold at the moment is obviously had a bit of a fall today, big bit of a fall today really. But we are still within this support range. So we've got quite a bit of support still here at around the 1492 area. Which I hope we can all see. So what I'm looking at with gold is if we do break this 1492 area, which will probably come down, hit the R2, as you can see there, the R2 pivot. If we do come back up and retest it, then we could be looking at a fairly steady drop on gold. It all does depend on how Wednesday turns out, But if we do play out this, all we've got to do is look left, and we can see previous resistance here. We do also have a bit of resistance over here. So these would be two levels that we'll be looking at. So 1475 back down to 1450. So 1450 is quite a bit more of an interesting one, if anything, because as you can see, we do have quite a bit of a strong trend line. Does coincide with it. So should we get down to here, especially if US and China start agreeing stuff on trade, then we will see these areas sort of tested. So if I go back onto the bigger time frame, sorry, and we'll have a quick look. We can see that we have some very strong daily divergence. So some daily RSI divergence here. So where we can see these levels up to there, making a huge higher high. We see that down to there, making a huge lower high. So it does give us a good indication that we're going to probably see some more downside in this pair. So some strong RSI divergence. And especially the daily candle closing quite strong. We are likely to see some more downside, but we need to see this support broken and retested first. And this previous support, which obviously you can see, look, 1, 2, 3, 4 times, acts as resistance. So if it does act as resistance, we're going to see definitely some more downside to at least 1470-ish. If that breaks, then obviously 1450 will be the next two levels of key support that we'll be looking at. So watch this space on that one. We'll see how this goes and take it from there. So obviously, should gold start to fall, then you should really see Euro USD fall as well, which again, it looks like it's falling at the moment. I was in a scalp on this earlier. I did get out just because it didn't make its intended move. So it was only a 12 pip stop loss, but I still closed it at a 5 pip loss. So this is obviously where we can see now on the daily structure, we're making lower lows, lower highs. This daily candle does look quite bearish. So it does look like we could potentially see some more downside to it. We are trading back within this big channel, and we did have a head and shoulder structure. It could well keep it falling downwards. So obviously, where can it go? That's the sort of area that we'll be looking at as a TP if we do get into this position. I do want to kind of sell a bit higher up if we can. I'm always hoping to scalp it up and maybe take it a bit down. Anyone in a trade now, this would be looking at UTPs at around 109.50s, roughly back at where you can see this long-term trend line and the minus 27 fib, along with the S3 pivot. So you ideally want to see this broken and hold, so 110.70. So if 110.70 does break and hold below it, then obviously you'd be looking at some good downside to this pair, to at least this sort of area. And with the dollar index looking strong, obviously you'll see this go downwards. But again, we've got to see how it goes up until Wednesday. So if you did want to short it, just be careful at 7 o'clock on Wednesday, when obviously there is expected to pick up some volatility within the dollar. But if gold falls, then more than likely you're going to see Euro USD follow with it, which should help. So moving on to the pairs that we are actually in at the moment. So looking at looking at Aussie CAD. So this is that entry at the moment. So let's go to the daily and break it down as to why we're in this pair. So what is that? What I was waiting for today was a retouch down towards the 70% fib. As we can see, we've got a nice trend line there. 70% fib, but we did start to slow down just before the 61.8 fib, sorry. We did start to slow down around the 50 and got a bullish rejection. So hence why I did take it from this level with a stop loss just below here, where the pivot was basically, because as you can see, we did close above this high. So I was expecting it to come down and make a lower high, and this was my ideal sort of entry price, which is only about 15 pips where we got in, and for it to move back up. So I'm expecting it to move back up, and obviously break these highs to make a new higher high, because it does look like it has formed a higher low now. So breaking it down to the smaller time frames, what we kind of done was, I did get in it a bit before this because I was anticipating this break, but all I did is, for a bit more confirmation, was obviously have this here. So we had this here. Once this broke, then it is confirming to me that we are likely again to test these highs and maybe go on a bit further on top, get a bit more meat on the bone in regards to this. But yeah, we had the area drawn up and it weren't far away from it, so there's no point being so picky over 10 pips. When we started rejecting off of that, then obviously that's why I took the long position. And if we zoom out to the bigger time frames again, we can obviously see that we're in this channel. So we reject off the bottom, we go to the top. Bottoms again, but goes to the top, and we got to the bottom, had a fake breakout, and we saw that the buyers held at this level quite well. So around the 89.40 mark, 89.30, we have seen that the buyers have held. So we did get a bit of a rejection candle on Friday, but that could have just been an end of week profit take. So I did wait for it to come down a little bit more. It does look like we're forming a daily hammer candle here. So we should see some more room to the upside. So I have got my TP set for 91.20, which is the minus 61.8 fib, and obviously near to the top of the channel. So I don't want to necessarily have my TP on the channel because it could fall just short. So I will monitor it at levels once we get to at least 90.75 and upwards. I'll take a bit more of a careful eye, because what you can see is that we're coming into resistance. So you can see here, these are the previous highs, expecting to beat them. We'll get rid of that. So we're going to monitor it from 90.75 because we've got previous support there, the minus 27 fib all the way upwards. And should we start getting strong rejection at this level, I'll probably end up closing it early. Does that make sense from why we took it? Hope it does. So US Swiss as well, let's get into this one. So US Swiss at the moment is kind of about 23 pips up. So again, as we can see here, what I had drawn up, which I did place in the groups on Thursday evening, I believe. So we did have an inverted head and shoulders on a 4-hourly time frame. And what we had here was obviously a break, a retest, a retest. So we've had 2 retests of this previous resistance. It's now acting as support. And as soon as we started moving upwards here, I took the position long because I expected it to move upwards and probably continue upwards. So when we're looking at the bigger picture, we can see, obviously we've had this trend line, only this small trend line, break with no retest. We haven't had a retest of it yet. So all I'm going to be doing is taking it back up to around about the retest level, which is around, just around here where I'm looking to get out of. So we did plan the trade. I did have my ideal entry in terms of it being around here, but we didn't quite reach that. So I did want it to dip just below the neckline again and get to around the 618, the 70 fib, but we didn't get that. We started to see support here, and then we've had a large bullish candle. And as you can see here, we've had a very weak red candle. And then now at the moment with this candle, it's currently green and looking quite bullish. So we are expecting to maybe move back upwards. And again, like I said, our TP is just up here, just on that sort of level. So hopefully we can see that continue to increase upwards. And if it does, then that'll help us out. So this looks like at the moment where it's 2 hours left of the candle, so I will evaluate it towards the end, but it does look like we're going to see a continuation up. So we've made a new high, come down, made a higher low, and it does look like we could be going on to make a higher high, especially with this structure now clearly broken. So normally with head and shoulders, you would have your TP where the initial move started, which would be up here. But I'm not looking for it to go that far because we do have this trend line. The trend line acted as good support previously, so I'm just going to literally see it acting as resistance now and just get out just before that and hold it. So the dollar index is looking fairly bullish, and obviously with this is a dollar long position, so we're looking at obviously holding this one. Does that make sense? Brilliant. Brilliant, brilliant. So yeah, let's see how this one goes. Like I said, about 23 pips up at the moment. We'll just see how this one rides out. Pound USD. So this is roughly around 4 pips up at the moment. So just as we can see, I probably missed the ideal entry, but I did want to wait for a bit more confirmation. I want to see a good bullish candle move off this fib. So as you can see at the moment, on the 4 hourly, we've broken this resistance. We've come back down, made a higher low, higher high, potentially made a higher low here. And then we could be going on to make a higher high. So I'm going to monitor it to see how it goes. The dollar is fairly strong at the moment. It's inside the pound. Looking at the daily, if we go back to the daily, we do see obviously this is pretty much a retest day. So we had good support here. It turned into resistance. Get rid of that fib. We can see this is pretty much a retest day. So quite a weak red candle compared to this strong bullish candle. So we could be going back up to around these sort of levels. But again, back to the 50% fib. But my TP is before that. So I'm looking to get out before all the noise starts coming into play. So again, as we can see, another channel broken, not retested. So we could be going back to retest it. Pound is obviously bearish against this pair, and because it is bearish, this is only going to be a short-term trade that we're going to look to take some pips out of. So I feel we do have some pips in this to the upside. Pound is heavily sold off, So yeah, must watch this space. But the dollar strong and the pound is strong. It's going to be maybe a bit of a slower mover on that front. And then finally, Aussie, New Zealand, what we're in. And again, we're in about 4 pips drawdown on this. But again, a daily candle does look like it's probably going to finish bullish. I'll monitor this when the daily close happens. And after Friday's bullish candle, it's just come back. It's retested this R1 pivot. Because it's retested this R1 pivot and then moved higher, we've broken the higher of the previous day. So we could potentially move up higher again. So this was a bull flag. We did take some pips out of this last week, and obviously we've got back in this week. We've retested this broken structure. You can see this broken bull flag. We've retested it and continued to move upwards. So I'm just going to see how this goes up until the 10 o'clock candle. But just looking at it, it does look like a good long-term move, because when we look at bull flags, what we can see is a lot of consolidation, so roughly about 4 months of consolidation we had here. And then what you do is you use the flag from the bottom to the top and you clone it. So you right click it, you click clone, and then you get another flag. And then theoretically, when it breaks, you put it up there, and that's where you get your TP. But again, I'm getting out just before that. We're getting out around this sort of area here. So why am I getting out of this area? Because we do have resistance. So just by looking on the weekly, what you can see is a strong trend line. And look, been retested once, retested twice. So all we're doing again is looking for another retest, and that's where our TP is. So hopefully we can take some good amount of pips holding this over the course of the week. So we see some more room to the upside on it. So they're the trades that we are currently in. And yeah, looking to continue on from making the good pips that we've already made this week. So I am waiting on this pair. So if we look at the 4 hourly, again, we can see a bit of an inverted head and shoulders. So as you can see, we've got a shoulder here, a head, which didn't quite touch the neckline, but we do have a shoulder forming here again, and we actually sat just below the neckline. So I'm waiting for this neckline to be broken, retested. Let's confirm this resistance is acting as support. And once this does act as support, it should make a pretty solid move upwards just by looking at it, because obviously, as we can see on the daily, it's been so heavily oversold, and we do have quite a good bit of daily divergence here. So meaning some RSI divergence, where we've got a low here, a lower low here, and then we've got a higher low here. So it's normally a little bit of a good indication that we're going to see some downside move to it. And if we do, then again, I'm only going to actually look at maybe 50% fib of getting to it, which is still a good couple of hundred pips. So it's still some good pips to be made out of it, just by taking that short-term counter trend move. But we're just waiting for a bit of confirmation as to when to take it. And it does look like, just by looking at it now, it does look like it's going to break. But again, we must be patient, sit on our hands. We do have a bit of consolidation just below the neckline. So we haven't had strong rejection away from the neckline. We've just got that consolidation, which normally is a bit more of a bit more evidence that we're going to see it break, basically. And should that break, again, there'll be some good pips to be made in it. So just by looking at this, we can see if we do get in around 129.50, we do have a bit of resistance potentially at 130, as we can see, but we should really clear that because the momentum should take us into making another higher high. So as you can see here, you've got your high, higher low. It's just closed just above here, higher high, higher low, higher high. Then we've got a higher low, which is here, and then obviously we should be going on to make a higher high should this get broken. And just as you know, if we look at the Japanese yen, we do relate it to the stocks. So we look at the stock performance and we can see that it's been bullish. So the reason why it's been bullish is because it does look like US and China are making progress in their trade talks. Donald Trump did talk up on Sunday about their talks are going really well with China. And pretty much everything that he says about it at the moment is positive because he wants to see the stock market obviously increase. So looking at all of them, you can see that they've all made a decent move today and they had a gap upwards and they're closing with bullish candles, should we say. So obviously if we do see these close bullish, then you'll see maybe a continuation tomorrow, but you'll see Japanese yen weaken off, again gold weaken off like it did today because obviously the stocks went up. The Aussie dollar should strengthen as well on the back of it. So we're waiting out for that one as well today to see how that goes. So across all Aussie pairs, they're pretty much the same. Again, we do have resistance that we're waiting to get broken. It's caused quite a weak daily candles the last 2 days, but it does show that we're starting to form some support at that level, which we'll go down to the 4-hourly and have a quick look. So again, we've potentially got another sort of, should we say, bullish W or pretty much a bit of a strange inverted head and shoulders forming there. But we do want to see, again, this resistance broken and retested in order to have a buy opportunity from it, which is around 72.50. Should we break above and then retest it, we could move higher up to at least this sort of level. So going back on the bigger time frame, sorry, we're flicking through. If we was to look at the fib, where this is, so we go from the top bit to the bottom, and then this would probably be around a 70% fib, which would be quite a strong push. It will take quite a while because this can be a bit of a slow moving pair. But if we do look at where we've got some previous support, we do have some support here. So this could be a bit of a stumbling block at around 74. So break and retest at this level could see us have at least 74 in the cards up until at least 74.50. So hello to the people who have just joined. I have gone over all today's positions. This is being recorded, so I will put a recording link in the group as well. But yeah, so I'm not going to take the long yet because obviously I haven't got a strong break of this resistance, and these two daily candles have been a little bit weaker than what I kind of wanted them to be. But just across most of the yen pairs, obviously apart from this one because CAD's been very weak today, we do have this sort of area of consolidation. So potentially this is going to go up because we do see some support forming at the bottom of the channel. This daily candle looks a bit weak for my liking. So it's not really offering me much of a chance to buy it at the moment. So if I was going to buy this pair, I ideally want to see a breakout of, let's go on, let's find some resistance. There we go. And then we've got our support at the bottom. So as we can see that we are in a bit of a triangle. So I do want to see it kind of break above out of here. Maybe hit that high again. Come back down. And then potentially you've got a buy opportunity up until at least this level. So going back to it, that is roughly around the 70% fib and the top of the daily channel. As you can see, we have had good resistance and support. We did have a bit of a breakout, but it's come back in. And that would be the level that potentially you may look at shorting again further down if you wanted to trade it back downwards within the channel. So you've got to wait for price action to see how it goes up at this level before obviously making the decision whether to sell. You want to see some form of rejection up here. But these are good levels to get in and sell at. Clearly, as you can see, looking at the trend, it's making lower lows, lower highs at the moment. This would make another lower high. So from around 81, 80, 81, 90 would be good selling areas should you wish to get in and sell. And again, Swiss is the same. All it is consolidating. Swiss has been pretty weak today because the dollar's been pretty strong. So we can see that we did creep above the S1, but it does look like we're closing below it. And this is forming a doji. So as we can see here, we've got our resistance at the top, our support at the bottom, and we're stuck right in the middle of the channel. So ideally, what I'd want to do is probably buy at the bottom or sell at the top, depending on how it went. So this structure, as we can see, its bear flag has been broken, retested, retested. So I wouldn't necessarily want to guess where it's going to go here. So although we did have a hammer candle here, it moved up today. The bears quickly come in and slapped it back down. So preferably be waiting for the bottom of this area, which is the monthly S2, to get touched to look for potential buying opportunities. Because the idea is to try and find some support to buy it and try and find some seller. So we shall wait and see. So bulls pushed it up this morning, slapped back down this afternoon, and now we're just holding below this S1 pivot. So I'm going to be waiting to see whether we do get a bit of a touch at the bottom. If we do around 108.10, then we could be looking at buying into this position up to at least the top of this channel. So roughly gain about 120 pips for traders that want to hold it. So again, because these are both safe havens, it is a bit of a weaker, it is a bit of a slower mover. So a very slow mover, because obviously if the world's at risk, then you're going to see the yen strengthen, probably more than this. But if nothing's really going on, you don't really see much of a move on these pairs. It's just about staying alert, should we say, of what's going on in the news, because it does help. Although you don't have to know news off the back of your hand, it does help with just understanding what the sentiment of the market is. So back onto the pair that we looked at last week. Well, that I posted in the charts last week. I posted in the groups last Thursday, sorry. Again, this is US CAD. So we've had a strong bullish engulfing candle today off of the R1 pivot. It is likely to go up a little bit further. So as we can see here, we've made a high, lower low, lower high, lower low. We're potentially at lower high levels. So until it breaks this high, I'm not going to really consider going bullish. But I am looking at this level in order to short. So if we look at the fib from top to bottom, move back, we've got the 70% fib, which coincides with this level right here, which as you can see is previous support, resistance in the past. And we do have obviously the monthly. Oh, we don't have a monthly anything. Sorry, I thought it was a pivot level there. It's not. Seeing things. And obviously you do see a nice descending trend line coming down as well. So we do have quite a bit of confluence just at this level. So this would probably be 134.10, maybe the level that we would be looking to get to. Maybe just before that, just observe price action around this level. With our stops just below the 50 level. Maybe around 65 above this descending trend line for a potential short opportunity. So if we do take it here, obviously you can see this trend line going upwards at the moment. If we do take it here, 134, say 10, I will watch to observe price action around 133.50-ish, just where this trend line is. Then if we do get that break of this trend line, which we may well do, then it will give me more confidence as to hold the trade a bit further down. But if not, if it does start to bounce off of this level, then I'll close it for a shorter amount of pips. So this is the first sort of area. If it does fly through this level, then the next level up I'll be looking at is around 134.40 up to 134.50 is where the 78.6 fib is to get in. But this could be a good move on this one coming down. Because at the moment we are still making, on this small little structure up, higher lows. We haven't made a higher high yet, but with this bullish engulfing candle, we could well go a little bit higher up, which could give us a great entry on the short. Whether I'm getting it long or not is another story. May take a short-term long on it tomorrow, should this structure break and be held and hold. But this will only be an intraday trade, so maybe we can get 50, 60 pips off of it. If obviously this resistance breaks, retests, holds as support, and then we can maybe look at trading it up just a little bit to the next set of resistance. Does that make sense? So I was hoping today we can come back down and touch this trend line in regards to having a buy. We didn't quite get there though. We did finish a bit short. Hence why I got in other dollar pairs, because other dollar pairs were technically fine. Any questions so far? We're all good? Any other different analysis? So why is CAD weak considering is going up? Being honest, it's got to be something to do with the CAD economy. I haven't seen anything today because they are correlated on most occasions, but it's not always 100%. So I'll be honest, I'm not sure. I haven't seen anything that's come out today that's said about CAD being weak. Been no real news today, so I don't know. If anything, I'd love to be able to tell you, mate. Otherwise, I'm not going to lie and say try and make up some story or something. But there's nothing I've seen that's come out on Live Squawk that's turned around and said CAD is weak because of anything. Yeah. Unless there could have been some sort of leak or some smart money moved on this data. Yeah, CAD's been weak against everything. I've just gone through CAD yen. But the yen's been relatively weak today as well because the stocks have gone up. So I don't know. Unless there's been some smart money moved around or unless the price of the CAD's being pushed down for a bit of a rally later up in the week. It's anything I can really think of, because it's not even no huge news. Nothing come out from the central bank in regards to maybe some hints on rate cuts or anything. So yeah, I don't know. Not entirely sure. So since we're on oil, might as well look at it now. So oil at the moment is obviously moving up, as you can see today. Probably moved up on the back of a bit of tension with Iran, because does anyone know what America done with the Iranian tanker? It's actually come out on Friday, late Friday evening. Yeah, it wasn't blown up, but yeah. Pretty much if they got their hands on it, it might be. So the US have executed a warrant to seize the Iranian tanker, because they believe it's going to be distributing oil to Syria. Being honest, that warrant's just a waste of paper. Doesn't really mean much. It's what they call a commencement order, so it's not a mandatory order. As you can see, it was released today, but it was released. It could have left any time over the weekend. The Port of Gibraltar that it's been held in, but it was only released. It did only set sail today because they were waiting for crew members to come, a new crew to come, basically, well, captain and crew to get on the ship and drive the ship. So they didn't actually dock before that. Didn't actually set sail before that, even though they'd been free to. So the US have come out and executed an order in regards to wanting to seize it. Obviously, it set sail, so they didn't seize it. And it could set off a bit of tensions again with US trying to get involved in a tanker seized by the UK. So as we can see here, oil's just in this big channel at the moment. So I'm literally waiting to see what happens when it touches this level, to potentially see on a short opportunity. So I was hoping it would come back down and hit this trend line before maybe moving upwards, maybe take a bit of a short-term opportunity to go up, but it hasn't. So I'm just going to see what it does once it gets to that level, because we found some resistance there, just above the 78.6 fib, so around 56.80. Should it blow up and go past there, then it's going to go quite a bit higher up. Cars are starting to reduce in oil. They're not holding as well. They're not selling as much oil, but it has slowed down. The selling oil. Saudi Arabia had their exports reduced, like the amount of people that was buying oil off of them reduced. So demand has actually gone down. So that actually come out this morning. So I'm quite surprised that oil did continue to go up, because Saudi's normally it is a leader in exporting oil. So America are now the leaders in producing oil. It used to be Saudi, but America use a lot of their oil for domestic. So just technically looking at it, we're going to be waiting until this level, until we literally look at a buy position, look at a sell position. So if I was going to buy, well, I want to buy it very short term, because obviously, look, we look at the ideal buys. We found support down here. We're going to buy it down at this level. Is it going to drop 500 pips at that level? Well, probably not. It probably won't. So all you can do now is try and find some resistance, which will turn into support, to try and buy it. So as you can see here, we had a bit of a triangle. It's broken it, moved up. So if it does come back down to this level, it starts being held as support, then maybe you can look to trade it upwards for 100 pips or so. But it's not nothing I'm going to get involved in yet. I'm just going to look at the short here. If it just blows through that level, because oil does have the capability to blow through levels like there's no tomorrow. And we'll tend to go from there and see what happens with it. So Euros is another one on my hit list. So let's go up to the bigger time frames first and we can look. Let's go to the weekly. Because the weekly is showing some really good divergence, as you can see. So, looking at the weekly, we can see that the chart's obviously making higher highs, higher lows, higher highs. So we could be coming back down for a potential higher low to be formed. So just by looking at some RSI divergence, where you can see here, we've literally been going downwards. And then just from where this is here, we can see this has been going upwards. And we've had good rejection there. Last week's candle finished bearish. And then if we look at this week's candle so far, we have literally hit this resistance again, slowly rejecting off of it. So I am looking for it to potentially come down and make another higher low. So just if we're looking to form some support, you can see that this is support. Now we've had a bit of a breakout there, but that doesn't matter because we broke back inside. But 1, 2, 3 rejections. So I am looking at a potential target level on shorts at 161.70, around that sort of level. So it is pretty good in terms of a bit of a downside move. And then today's daily candle has been pretty weak, if anything. Fairly weak, should we say. So this resistance now support, and guess what? It looks like it's now acting as resistance. So should this continue to act as a resistance, you will see this move downwards. Oops. Have this. Let me sort it out after. So going down to the 4 hourly, we can see that we are in this nice wedge. So ideally, where do we want to sell from? We can see that we're on the 4 hourly making lower lows. We've got high, low, lower, high, lower, low. So if we was to move the fib from there to here, to the bottom, we potentially have the R2 pivot level here and the top of this channel, which that may act as good resistance and could provide us a decent entry to get in on the markets, just for a little short-term move down. A bit of a counter-trend trade, should we say. I do like our counter-trend trades. So what we'd kind of get is a bit of a move from here. Stop loss, I don't want stop loss to be that big down there, to at least around about this sort of level down here. So it does represent a decent little risk to reward. Hopefully this holds as resistance and we'll get in on the markets, and then for a bit of a move to come downwards. And then this is the sort of level that we're looking at as a far sort of downside, but again, like I said, I'll be happy if it come down to the bottom of this again. It would still represent a good amount of pips. So selling from resistance and getting out of support. I've got quite a few pairs already. Pound Swiss looking good for a bit of a move upwards. Again, I was waiting for a bit more of a deeper retracement today. I was obviously waiting for it to get down to at least around these sort of areas, but it did look like it's hit off this resistance and then just moved upwards, which is a bit of a shame, a bit annoying. But that can be the market sometimes. So kind of didn't get down to the price that I wanted. So I do like this fib level, as we may well know. But again, I do see some more upside to this pair. So where I see it going to is at least, get rid of this smaller fib. Where I see it going to, this hammer candle here, so I do see it coming up to at least 121. As you can see, we've got a nice trend line coming down here. So I'm looking for it just to go back up to this sort of level. If we can get in on it tomorrow, then fantastic. The pound does have the ability to absolutely tank to maybe give us some good sort of entry in the market. So all we're going to do is draw some previous resistance. Which is there. And also another line here. So do I think it will get back down there? Probably not. So I'm going to see if we can get some movement off of here, but it does look like it's forming a bit of a bull flag on the smaller time frames. I don't want 1 minute. So again, we have broken out of it. So I'm going to look for it to see whether it can come back down. Maybe retest, but again, I do want this as a sort of ideal buying price if we can get it in terms of buying upwards. Euro, yeah, of course I can. So we'll go to the daily. So like all the M pairs, as we can see, this again, I do still see some upside. I did only take some pips off it today, so I did explain earlier the euro inflation did come out disappointing, which is not good for the euro. So I did catch a little bit of a move upwards in it, then I got out just to bag some pips in it earlier, and just thought I'd reevaluate it. But as we can see here, we've got a bit of a morning star formation forming. Ideally, I do like to see it close just above. When we can see around this sort of area, 1, 2, 3, 4, 5, 6 days, we've seen that sort of zone hold as good support. So potentially I do see it rising. We can see here, good support there, bullish candle here. So ideally, where you're going to have your first TP is probably around 119.20, where we had ours earlier, just at the top of this resistance. And then if you're going to hold it a bit longer, then you're probably going to be looking at these sort of areas back where the 50% fib is. And we can see previous support here, which is around 120.20. So this is something that I'm pretty much was looking to get back in. We'll go from there. And it does look pretty decent. So where am I going to get in? So obviously we can see this is the perfect sort of area to try and get in at if it gets back there. So we did have the low broken of this candle in the 4 hour. So if we can maybe get back to 118, it's only 18 pips away, then we'll look at buying it upwards again. If this is a TP, because all you can see just mass consolidation at the moment. Consolidation is obviously about buying as support up to resistance. And we'll go from there. It still is pretty, compared to this, it is still a pretty dull red candle, so pretty weak red candle, which it could be going now, if anything. Let's have a quick look. If I was just to draw a fib from there to there, it's hovering around this sort of level. So ideally, I want to see it come back down. Yeah, around 118.05, 118 would be the ideal sort of price, because look, we've had good resistance here, resistance there, support there. So it does represent not a bad level to get in at. So it's only 15. I might actually set a buy limit for it and see where it goes from there. Because look, now we look up a high, come back down. Hopefully we can make a bit more of a high low down there, and then we'll end up going from there. Does that make sense? Does that help? I do see us breaking out of this consolidation upwards, because if you look back to 2017, we did fill a gap. It's not on these charts. Did fill a gap back from the French elections. So Euro New Zealand. So again, Euro New Zealand, and we're waiting for this to happen. So we're in a bit of a 4 hour triangle. Just going to wait to see if we break down or break upwards. If we break upwards, we'll look to long it, at least back up to these highs. If we break downwards, then we'll be obviously looking to sell it back down to around these sort of levels, around 170.50, or even further down would be looking at the daily. be down to around here, which is around 169.50. So we've got to wait and see on this. It has finished bullish this candle today, so it could well break out to the upside. But let's wait and see how it breaks first. Right, do we have any more questions before I leave it there? Or any more pairs that we need to look at? Are we all good? So let's continue the week with roughly about 100 pips made from today. And let's hope we continue upwards and onwards. Hopefully we all caught some trades. I'm currently catching the trades that we are in. Make some good pips off of them. So yeah, there is quite a few intraday trades going to be this week. So I'm around on the charts. So I'll be doing some bit more trading. I am active all week, so feel free to ask me any questions that you want. Right, all, take care and enjoy the rest of your evenings. See you later.